This is not support and resistance trading. It's not supply and demand, Elliott waves, SMC, and all the rest of the strategies out there. But rather, this is common sense approach to trading. You must ask yourself, what I want to do, does it make sense? Based on what I can see, seeing is believing. Everything is on the chart. We're going to be talking about the USD index based on what happened last week. In the previous videos, we did back-to-back follow-up on the happenings. And now we're going to be talking about what's happening at the moment and what to expect next. Now, this is going to help us to take advantage of the directional bias of this USD index. And of course, we're going to use it for EURUSD, GBPUSD, and USD Those are the three major currency pairs that we are going to be focusing on in this our little corner. Now, for this USD index, of course, we're starting from the daily time frame. And last week we talked about this area here. Remember, always look to the left. When we started talking about it, price was still at this area here. And we said, look to the left, you will see some areas of support, resistance, resistance, support, support, and the story continues, resistance, and so on. So whenever you look to the left, and that's why we're using a rectangle here, you could always adjust the size or whatever the case may be. But just make sure it captures that area, because at the end of the day, price reacts to an area or a level or a zone. Price does not react to an exact price point. So if you're using the psychological round numbers, that's good. But also take note that if you're looking at 100 as an example, price could get to 100.50, 100.20. Look at that area and not the exact price. So we said last week that price most likely was going to push higher, which was what exactly, happened. And we were able to take advantage of it on Euro USD where we were short and we made some good returns on that. Now, price has gotten to this area here, right, of resistance, or rather, I'll call it flip zone. As we always say, look to the left, you see some areas that have acted as support and resistance in the past, and that's simply what we call flip zones. Now, these flip zones, we created an indicator which we called Flippy that identifies these powerful flip zones for you, and then you can easily trade them, right? But don't forget, it's about common sense approach. You must ask yourself, what I'm about to do, whether whether it's respect to entry, let me say that again, whether it is with respect to entry or your risk or your trade management or whatever the case might be, right? It must make sense to you. As an example, based on the risk, you have $10,000 in the account and then you want to risk $1,000 for this next trade. Does that make sense to you? What percentage is that? You want to risk $5,000 out of your $10,000 on that next trade. Does that make sense to you? And so on. So you must always know the risk management that you are comfortable with. And if it makes sense to you and it doesn't mess with your psychology, then go ahead, right? So what we're expecting now is price to play around this USD area of resistance, flip zone, and maybe drop or then push higher. But then we are looking at this major wave. This major wave here was the reason why we drew the Fibonacci from this lows to this highs. That means that by all things being equal, even on the daily time frame, even though it's going to take a little time, we're expecting it to get to this 100.50 area here. Now, if this happens, that simply means that we're expecting Euro USD to drop further down. We're expecting GBP USD to drop further down. And then on the flip side, USD CHF, we're expecting it to appreciate. You can as well use this chart of USD index to look at your Euro USD, Pound USD, and USD CHF, and you should see the same thing happening, right? You might not see the exact thing happening on others, right? But you should see and have some clues. I'll give you this example, right? I'm going to flip over to the higher time frames from Euro USD. Look at this USD index now. You can see it has hit this area here right, that we drew, right? That horizontal line. But if you look at the Euro USD here, it is yet to get there. That means that there's still more room for it to drop down. This is for Euro USD. But if you look at, as an example, GBP USD, right? For GBP USD, you will notice something. You notice that, yes, indeed, price has hit that area here, just like what? Just like the USD index. Now, if you look at the USD CHF, you see the same thing. Price has hit that area of interest, right? Okay, I didn't mark it here. But price has also hit the area of interest here where it is presently struggling with. So looking at all these instruments, right, Euro USD, GBP USD, and the USD CHF, based on the USD index, because you're using the USD index as a major factor for determining the directional bias for these currency pairs. And this is going to help you to position yourself for clinical entries, right? So that you can execute them accordingly. This will also help you to reduce unnecessary trades. You're not placing trades just anywhere, but now you have some form of precision. And of course, this will help you with your risk because now you can decide to put in more risk to this one trade. You waited for a while, right? You don't get trades all the time because your trading has now evolved. You're now paying more attention. You're now adding that factor of common sense into what you do. And then it is paying off at the end of the day. And it will help you with your psychology. We will still be talking about more things with respect to journal, which will help you to understand yourself better. And of course, accountability, which is good for you to have someone that you can always relate to, someone that you can always discuss. Oh, for this week, assuming it's a Saturday now, for this week, this is what happened, this is what I did, this is what I should have done. And then you guys can rub minds, and then that will help you. Like a mentor, as an example, right? And at the end of the day, gradually, you start to grow. One thing I always say, right, even though I might not talk about it all the time in my videos now, is that always pay attention to what's happening in the news for the week. You have the forecast, and of course, you have the breaking news. And we already know what's happening in the world with the wars, with the hantavirus, with the Ebolas, and whatnot. That means that the market is always active. And of course, with this high impact news coming out this week, we put on the funnel and only left the high impact news here, the red ones. So you can see the ones coming up. Nothing much is happening today, but from Tuesday, Wednesday, and Thursday, we have some high impact news coming up for CAD, USD, the FOMC, CPI, and whatnot. So that means that we should be expecting volatility in the market this week. So always pay attention to the news, right? Especially if you are a short-term trader like a scalper or a day trader or whatever the case might be. But always make sure that your chart talks to you and you listen. That is where the common sense comes from. Now, if you want to know more about the common sense approach or you have questions or you want to test out the Flippy indicator, comment below and we'll see how we can help you out further. Right? Till the next video, trade safely and protect your account accordingly. Thank you guys and cheers for now. Bye.